What's up, guys? It's December 5th, 2024. Had an interesting day in the markets. Really great for leg counting. And if you can follow the market cycle, well, market cycle saved us. Reading the market cycle should keep you out of this. Daily chart, 15-minute chart. The chart on the right side is now the 15-minute. I changed it from the 45 because I don't even look at the 45. I'm aware of it. I think over time I will look at it because now, why do I look at the 15-minute chart? Because 3 5-minute bars equals one 15-minute bar. 3 15-minute bars equals one 45-minute bar. So here we are, the higher trading range. Why is it trading range? Because we had a big down, big up. We got a leg one, leg two, leg one, pull back, leg two. This was the last time yesterday's low was tagged. And the reason I'm bringing that up is because, when I saw this sell off, I thought yesterday's low would be a good target for some sort of like starting of a trend. But we've been in a trading range, so the probabilities for longs increase at the low of the trading range. And look at the daily chart. The last time we tagged yesterday's low was on the November 26th. So we've been just trending higher. That's something to think about. Yesterday's high would be a better target. However, I'm saying that now after we get a sell signal. So that's just an observation. I'm not trying to say target yesterday's high tomorrow. We have a gap now, so that's good. We have another bull gap. You add that here, here. And I talk a lot about gaps because they're really important for reading market context. This gap is not a good gap because it starts with a bear bar, then it has a bull bar, and ends in a bear bar. We like to see gaps like this: bull, 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 3 bars in a row. That shows us they're trap traders. If it's a bear gap, if there's bear bars, one second. If there are bear bars, then there's a likely chance that bears will short it and the gap can get closed. So the gap is inherently weaker. 15-minute chart. Yesterday we had a double bottom. Today we had a leg one. Yesterday we had a double bottom, leg one, pull back, leg two. And then within today's price action, look at 15-minute, leg one, pull back, leg two, pull back, leg three. Something I just noticed. This is still the 45-minute EMA. This is showing the 15-minute EMA, so I'm going to... Oh, no, it's still showing the 45-minute. I like that. I'd rather see the 45-minute on the 50-minute chart, if that makes sense. So, higher time frame EMA. Let me see. Yeah, no, not a fan of it. Just gonna leave it like that. 45-minute chart, 45-minute EMA, 15-minute bars, 5-minute bars, 45-minute EMA. The higher time frame. I don't know. I'm gonna think about this now. I might have the 45-minute chart just because of the EMA. I don't know yet. For now, I do look at the 15-minute intraday just to look. I'm not trading off the 15-minute. I only trade the 5-minute. Anyways, let's get into it. Bar one, gap up, bull bar, very quickly closes with bar two. So now we have a leg one, pull back, leg two, pull back, leg three, pull back, leg four. Or if you're just using today's price action, leg one for the bulls, leg one, pull back, leg two, pull back, leg three. Leg three is climactic, trying to break above yesterday's high. Bar eight is bad follow through. If you're in longs, I think it's safe to get out when bar 8 closes or as it's selling off, in case we have a wedge top here and bar 9 is a strong bear bar breaking out, attempting to break out below the EMA. If you're so long on bar 9, I think you have to get out. Bar 10 is a pullback, so we have a bear bar on top of bar 7. So 1 bear bar, 2 bear bars, 3 bear bars, 3 bear bars is a micro channel. Leg 1, pull back, leg 2, pull back, leg 3. I was short here. I scalped out for a tick, and then I got short again here, and I scalped out here because we weren't seeing any lower prices, and we were in a bull regime. So here's a micro channel. Leg 1, pull back, leg 2, pull back, leg 3. I was hoping for the market cycle to reset, and in a way, it did. Leg 1, pull back, leg 2, pull back, leg 3. when we get leg 3, we have to think trading range. That creates a wedge bottom. Within this wedge bottom, there's a leg 1, pull leg 1, pull back leg 2, pull back leg 3. So we have a wedge bottom with a wedge bottom in a higher time frame regime. 21, I think it's safe to get at shorts here. You can look to see who we reject the EMA and get short again. However, when we see 22, that's a bullish price action. 23, we get that breaking out. We get a body gap breaking out above the EMA. 24 is a good follow through with another gap. I bought 26. 25, 26 is the first pullback after a 4-bar micro channel. And we rallied. I got out on 32. I got out on 32 because it was stalling. If you guys remember how this bar formed, it rallied and it sold off, and it was just stalling around this high. And then bears may have given up, and that created enough for another quick leg up. Why did I just draw this like this? Look at the high tick of 32. Look at the low tick of 33. There's a implied leg right there. So now we have a leg 1 pullback. It's 33 breaks the trend line low, this trend line. So we can say leg 1 pullback. That was ugly. Let's just, to keep things simple, leg 1 pullback, leg 2 pullback, leg 3. But we still have this price action here. The reason I bring this up is because I think getting out at 33 is a good, if you're long, I think it's safe to get out around 33 because we're trading highs and there's an implied third leg hidden. You could even count it as a leg 1 opposite bar, or excuse me, doji is a trading range bar. So there's back and forth trading with bar 31, leg 1, pull back, leg 2, excuse me, leg 1, pull back, leg 2, pull back, leg 3, parabolic wedge. Look at 34, it sold off, breaking this low. So now we're in the third leg no matter what. Leg 1, pull back, leg 2, pull back, leg 3. May seem kind of confusing, but in trading ranges, we have to count implied legs and we look at printed legs. So we have a leg 1, pull back leg 2, pull back leg 3, wedge top in a trading range. If you think this is, I got caught right here. I hit out pretty quick. So look at this high. I'm gonna draw the line. I don't trade with the lines on the chart because they confuse me. I like it to be red. So I'm gonna draw this line here, and then look at, if you think this is a strong breakout, the probabilities change drastically in the third leg. So bar 40 is strong. Bar 41 is not good follow through for a breakout. We want to see these kind of bars. Well, not really, because this is a climactic bar. What we want to see is a steady. Look at when we broke out of this range. They were just they were a little bit overlappy, but they were relatively the same size. So let's just measure just to see. Don't worry about that. I'm just measuring. See, same size, same size. Okay, not the same size, not the same size, not really the same size. These two bars is about the same size, smaller, and they're getting smaller. They're getting smaller. So to see a good breakout, we want to see orderly bars. And look here, we're in the third leg. So leg 1, pull back leg 2, pull back leg 3, and the legs are shrinking. So this could be a failed breakout. 43, I think, is good to get out of shorts. I mean longs. I was long from here, and I held thinking we were going to get a double top before we sold off. But thinking out loud with you guys here now. This is a wedge top. I should have got out on 43 because that's a bar closing on its low at the range highs. Failed breakout. 44, pull back. So leg 1, pull back leg 2. This sell-off became climactic. Breakout resets the market cycle. Leg 1, pull back leg 2, pull back leg 3. We go range bound. 47 gets its second leg here. Rally leg 2. A second leg is complete once it goes one tick past the prior leg you're trading. And when that being said, that's also why I got out on 32, because this rallied, pullback rallied, and kind of sold off. So like, well, we got the minimum. Bulls got the minimum. One tick above 24, so I had to get out. I wasn't too. I thought this might have happened here, but Bulls got an extra leg, and then again, the probability changed. Third leg in the trading range, increased trading range behavior. So this whole thing is now a big up, big down. And I mentioned the market cycle in the beginning of the day, beginning of the video, and that's because the market cycle resets with a breakout. So we have a breakout. Market cycle resets leg 1, pull back leg 2, pull back leg 3. Market cycle now tells us we're in a trading range. sells off, and then we go sideways. So this is the complete market cycle: breakout, trading range, trading range. With that being said, I also just said breakouts reset the market cycle. So if we didn't read the market cycle from that perspective, we can read the market cycle from a breakout. 48 is the first opposite bar, so now we're in a channel phase. But we also have a big up and a big down, so this channel phase is weak. We're in trading range, so the probabilities for bulls are better at lows, and that's why we see all this strong bull bars. They have limit orders at lows. We're in a trading range. You buy the lower third, you sell the upper third, you do nothing in the middle. I actually bought this bar thinking we were going to test the close this gap here, but this bear gap ended up staying open. It acted as resistance. Bullish tried once, bullish tried twice. Second leg trap, by the way, into resistance. 60 is strong sell off. Bullish try again. Another second leg trap here. 68. Leg 1, deep pullback. Leg 2 for the bears. That can also be 3 legs lower. This is all one triangle here. So there was a question in YouTube. I'm gonna talk about it in the comments in the previous video, yesterday's video. It was, how do we catch bars 67, 47, 46 through 49? The question was, the person wanted to Bushan Rai, if you're listening, I'm talking to you, buddy. And your question was 46 through 47. How do we catch that? And there's a couple ways to catch that, but I want to talk about consistency here. I trade 3-bar micro channels with a pullback, so I could trade this. I can't technically trade this unless I'm basing off this, and that's okay because I did buy this and I got out here sideways. But what did I want to talk about is this: 1, 2, 3, 4. Leg 1, trend line break 45. So you would be forced to short lows in a bull regime, which is tough because just very well. Look what happened 3 bars later. It rallied right back, and if you were holding for a swing lower, you would get trapped. This is a sell vacuum. Sell vacuums are fast and sharp, so you would have to scalp this from a breakout perspective, but you would also be front running the breakout. So something I don't have a strong answer for you because I don't trade like that, but this would be a scalp. You'd wait for the breakout and then scalp and then scalp. I don't know if you would look for a second leg, but let's just go a few bars over to the right, and now we're talking my setup here. So let's put this here because you said 46 to 49, I believe. I have to relook at the question. I don't want to open the internet right now, but it was around, I think your question was, how do you catch this leg? 10 points, okay. 10 points, but how do you catch the leg? If you're shorting into support, it could rally. However, now we see this rally here. First pullback. What did I do yesterday? I can't remember. I was trading sim because I took a loss earlier. So 55. So leg 1, pullback leg 2. The question is, would you want to buy that high? Because now we have a strong leg. First pullback. We're looking for the second leg. Second leg's a highest probable trade. You buy this high. 8 points. Move this to the side. Now we see 1, 2, 3, 4, 5, 6, 7 bar rally with a very shallow pullback. 2 legs lower. Leg 1, pullback leg 2. It's a wedge bottom and a rally. That's a good buy. 66. And 66 is like buying here. You have to be cautious. You're buying into a third leg, but if you believe this leg is trying to get its own second leg, well, now look. To the high here is 6 points. And now let's just say for shits and giggles, 66, 67, 68, 16, tail of 69 is high. Gets its own second leg. Market goes sideways. Again, wedge bottom bull flag. In a bull regime above the EMA, we have over 10 bars above the EMA with 2 gaps, so that's trending behavior. So there are reasons to take this. You catch another 4 points here. So 8, let's say that's 9. Plus 6 is 15.5. Plus 4.2. So you're going to catch just under 20 points. And the reason I'm bringing this up is because this is a setup. The market set you up, pull back. The market set you up, pull back. The market set you up, pull back. Here is a risk. You short into support and it can just rally. So you see what I'm saying? You can definitely take that from a price action perspective. From a systematic perspective, I think the bull side was stronger. Bull regime, we have open gaps here. I know we're backtracking a little bit, but this doesn't matter because there's a gap here, there's a gap here, there's a gap here, there's gaps somewhere here. There's more than that gap. Even though it's the same concept, because look here now. Yes, you can catch this short 3-bar market channel, no problem, but you're shorting in a bull regime. That's why I took this, because I saw these 3 bars. I scalped out. Bull regime, got to scalp against the regime, but then so we're short against the bull regime, so you got to scalp out. But then look, just how I talked about this setup right here, these bull legs. Look at these bull legs. Set up, pull back, measured move. A measured move is hard, so you can scalp out, or you could hold, up to you. You got to determine what conditions that you hold, what conditions that you scalp out. Set up, pull back, rally. So this is a setup that you can trade. I can answer you on that front. This, I think the probability is not good. The probabilities work out because we're in so it's a trading range. So hold on. This is what you asked me. How do we take this short? How do we take 46? How do you take 46? We have 4 bars here. That's fair. But my biggest losses have come from front running breakouts, which is why I wait for the market to set up. I wait for it to pull back, and then I assess the situation. That's the premise of my trading. I explained the market cycle, how to get chopped, so you are avoided getting chopped up here. And I hope you guys did well today. I hope you guys are starting to understand the way these go. I like to keep things simple. I'm convinced if anyone can tell me otherwise, please try and tell me something different. That all you need to know is how to count legs and what part of the market cycle we're in. If we're in a trading range, just buy low, sell high. A trading range or a limit order market. I don't trade with limit orders, so I'm not going to tell you guys to place limit orders here. But you can see we have a 3-bar rally against a 3-bar rally or more. It puts us into a tight trading range because both sides should get a second piece. When both sides get a second piece, the market is confused. What is the hallmark of confusion? Albrook says it all the time. It's trading range behavior. So there you go. Another piece of the puzzle added to your something. I was gonna say gun. added to your ammo so you can shoot later. Hope you guys had a good one. Some pretty fun things going on in the background. I'm excited to share with you guys maybe at the end of the year. And yeah, I hope you guys had a good one. Hope you guys are doing good. Keep studying. Keep asking me questions. I'm gonna tag you. I'm gonna talk to you in the comments bush and refer you to this video.